All right, should more be going public? Mark Benioff has been outspoken, saying stop avoiding the public markets.
Absolutely.
If you're a good company, if you know how to lead, go public, get tested.
Yeah, I wrote a blog post. Yeah, I wrote a blog post saying the exact same thing, and I've been a proponent to that level for a long time. A couple different things. What's happening in the market right now? There's a dearth of high growth companies. Right? So now we look at Facebook, Netflix, Google as hyper growth companies when their hyper growth is behind them. They're still growing quickly. What's happening now is the hyper growth in private companies is being bought out by private investors. Right? I don't know that Uber is going to accelerate their growth. Their growth rates are probably going to decline.
And those early investors can't get out.
They can't get out. They're stuck, right? And so I think, now with Reg A Plus, there's two versions, a 20 million version, a $50 million version. I'm actually working with a couple different banking groups to say, look, let's go out and find companies that have 30 million in revenue, 100% plus annual growth, 10% net profits after tax, and let's start finding ways to use Reg A Plus to go public, because that accomplishes several things. One, it gives investors a liquid way to invest in hyper-growth companies, which I think is great for the market because it doesn't exist right now. It's great for the company that's going public because of the visibility, the liquidity, the cash that's raised, the liquidity for their investors, the liquidity for their employees. Just so much upside, makes it easier to raise more capital. And the whole argument that now you're beholden to the market and quarterly earnings is nonsense, right? Because what's worse than having your stock get crushed like LinkedIn is having your sales not meet expectations of private investors, having multiple down rounds when you go out and try to raise equity, and now you have no shot of going out and getting public.
Then why stick with your sharks? You mentioned Twitter earlier. Why not knock on Jack Dorsey's door? It sounds like he could help right now. Would you want to?
In what way?
Why not invest in Twitter?
I think the price is still a little bit too high. I think Twitter is very fixable, but I think they have that whole Silicon Valley mentality that kind of works against them.
Would you take a board seat if they asked?
I'd talk to them, but I think Twitter is so fixable and has so many things that they can do right.
How could you fix them? What would you do?
He has to call me to find out.
There you go. How about Yahoo? Fixable?
I don't know enough about the details anymore. I mean, you look at them and if you compare their expense base to a Twitter, right? They're much more bloated, and Marissa is going out there to try to make those changes. I think Yahoo has a lot of core value, but again, Silicon Valley, that mindset out there, look, culture matters, and Silicon Valley has a very specific culture. It's the old Hollywood culture. And when you hear about the old casting couch days of Hollywood from 30, 50 years ago, and you'd hear stories about people saying, they're always looking over your shoulder for the next bigger star, the next better script. In Silicon Valley now, everybody's always looking over your shoulder for the next startup, the better startup, the bigger unicorn, the decacorn, right? People just don't dig in and go to work. And I think, Dallas, Austin, Boston, New York, there's so many places right now, Minneapolis, Pittsburgh, that are hyper growth for startups, that the culture makes it so much better for growth companies that I think Silicon Valley has become a significant negative. There's only one good thing about Silicon Valley. That's where the people who create the exits are, right? There's people who will buy your company. The VC firms have the connections. We'll find you someone else to buy. We'll find a greater fool to buy your company. And Silicon Valley is better at that than anywhere else in the world.
Mark, then why not go bigger? Why wouldn't you want to become a constructive activist? You clearly understand the markets, you understand companies, but you also understand culture, leadership, entrepreneurship. So the criticism of activist investors is, well, they only know how to play the markets, but they don't know how to turn around a company.
So
you could do both.
Here's what I do. Every Friday night on ABC on Shark Tank, and with all the replays, there's 20 million people that watch any given episode.
But those are small companies.
Not the point. The bigger point, the more important part, and the reason I do the show is every single Friday night and all those repeats, we reinforce the message that the American dream is alive and well. And if there's some 10-year-old boy or girl that's watching, and in the back of their mind, there's just an amazing idea, and we give them confidence to go out and start that company. We send the message to them that being an entrepreneur is amazing, it's a great thing to do. If we can do just one of those, two of those, five of those, and have that spread, that's far more than I can ever do as an activist investor.
You don't look at IBM and think, I got to step in there and turn it around.
Oh, hell no. I look at IBM and say, Watson better work or they're in trouble.
Do you think it is working?
I think it has a chance, yeah, but IBM has become so financially engineering driven with all the stock buybacks, and they've got some great technology there, but it doesn't really drive their business yet.